All right, guys. So welcome to the second day of the Forex workshop. This is a 2-day bootcamp where we are starting from the very scratch of Forex trading, the very fundamentals. Okay, so these are concepts that you need to have, under the bag to really, start a solid career in Forex. All right. And yesterday we started from the definition of what Forex is. We talked about the market participants. We talked about currencies, currency pairs, the 8 major currency pairs. We talked about pips, what a pip is. We talked about how to calculate a pip manually and with the tool on MetaTrader 5 and TradingView. We also talked about lot sizes and how that amounts to how we make profits or loss. We also talked about the candlestick anatomy, right? The difference, we have the bullish and the bearish candlestick from open price to close price, right? And then we talked about Forex trading sessions. So we were together yesterday for a little bit of almost or over 2 hours delving into this concept. And yes, most likely we also talked about, Forex brokers in detail. We talked about TenTrade being our recommended Forex broker to trade, right? So were you able to create an account with TenTrade? Let me know in the chat box if you're able to create an account. Remember, yesterday I gave us an assignment to create an account with TenTrade. And when you create an account with TenTrade, you also want to create a demo account. Okay, if you did that, just give me a response in the chat box. If you didn't, let me also know in the chat box, because today, what we're doing today, we're majorly practicals. I'd like to show you some things. So I'd like you to at least open a trade or close a trade today. And then that will help us set the ball rolling. So let me know in the chat box if you have an account with TenTrade now, and then if you have a demo account set, so that we'll just go ahead. Okay, so I'll just wait for a few seconds to get a response from you. If I don't get a response, I'll just go ahead. Awesome. So we have our demo account created. Good. So were you able to log in to your demo account? If you're able to log in, type in yes. If not, type in no. Logging in is quite easy, right? Good. So you're able to log in, I guess, on your phone, right? I think that's easiest one on your phone. Good. So what I'm going to do is so later on, I'm going to share my mobile, my Android phone with you so that you see how. So we are going to look at the trading platform and then talk about how to open trades, set stop loss, and all of those stuff. But before we go into all of that platform, let us talk about a few concepts for 10 to 15 minutes, and then we'll just go straight into the practicals. Now, the first thing I want to talk to you about is everything that revolves around opening trades, right? This is opening trades, all right? Now, I want to talk about a few concepts called, let's talk about the market orders. And then we also talk about stop loss. And then we'll talk about take profits. Market order, stop loss, and take profit. So let's talk about those 3 concepts before we go ahead. Now, market order. So we are on a currency pair called AUD CAD right now. So this is a TradingView app. So like I said yesterday, TradingView is also a platform where you can do trade analysis, right? But you won't be able to enter buy or sell trades with your TradingView. We can only enter buy or sell trades using TenTrade on the MetaTrader, right? Good. So let's say you've done your analysis on AUD card, and then you want to enter a buy or a sell trade. There are different categories that you can use. There are different ways rather that you can enter a trade. So basically, the two major market orders that we have instant execution, and then we have what we call pending orders. Okay. So instant execution and pending orders. So let's name this 1 and then 2. So when we talk about instant execution, we are talking about, so if you want to enter a buy, you want to be entered into the market immediately, instantly at current market price. Okay, so that word is used a lot in the Forex field. So when you're talking about market execution, you want to be entered into the market at what's current market price. You see it as CMP most of the time when people talk about it. Okay, CMP at current market price. So when I go to my MetaTrader 5 and then I click on buy or sell, right, I'll be entered into the market at the current market price with either the bid or the ask price, right? Pending orders, on the other hand, is you want to be entered into the market at a later time, not immediately. Unlike instant, that the trade is instant, with pending orders, you want to enter at a different price other than the current market price. And then we'll talk about all that short now. So let me go to my MetaTrader 5 platform, and then let's just deal with it hands-on. When we talk about instant execution, so you would have pretty much the same, you know what? Let me just go ahead and connect to this Zoom, and then I'm going to share my screen real quick. All right. So I should have done this a long time before I entered the Zoom, but let us go on and start it with this, right? So this is a particular chart. Okay, so the same AUD card. So let's say I want to enter for a buy. What you want to do is on your, so Mr. Sunday, what you can also do is to, since you are on your demo account, what you can do is you also, as I'm doing this thing, you also want to be active on your MT5 as well. So please kindly load up your MT5. If you can, that's if you are not. Okay, so because it's Zoom, you can hear me while I'm speaking, but you might not be able to see. All right, so but try and just follow along as much as you can. All right, so on your MT5 on your mobile phone, once you are logged in on your mobile phone, you are going to see a page that will list all of the quotes. Now, by quotes, I mean all of the currency pairs are available. All right. So either the currency pair that is not available on that particular quote section, what you can do is to add the quotes. Okay. So give me a second.
Recording in progress.
All right, so let me share my mobile phone. Okay. So let's start with mobile phone first. And then I'll show you this. So you can see my screen, right? So I'm loading up this MT5 account. So let me go to, okay, so let's use this account, for example. So this is an MT5 account. Once you are logged in, you will see this first below, you see the quote option. All right, at the bottom, you see it. So the quote will give you all of the currency pairs available, right? If there's a particular pair that you cannot find here, what you can do is just, there's a plus sign at the top right, like so, okay? That top right, so that's a button to add a currency pair on this list. So when you tap on it, you can just, under find symbols, you just type in the pair you're looking for, right? Maybe GBP card or something, and then you add it. So once you do that, it will now be on this particular quote. So that's how you can populate this easily. All right. So let me go to my account. Let's do this. I'll just show you something real quick. Okay. So let's open a trade on AUD card. So we're going to click on, so you're going to tap on the screen, tap on the currency pair. So you are on your mobile phone right now. You want to tap on the currency pair. So you tap on it, and then you click on new order. So you click on new order. At the very top, what will you see? You'll see option for market execution. So right now, the only thing that we are talking about right now is just the market execution. All right. So what are we going to do? So you leave it at market execution. That is if you want to enter the trade immediately. So you're going to click on market execution if you are taking entry in the trade right now. And the next thing that you have to fix is let me annotate. After market execution, the next thing you have to fix is the lot size. So where you have that 0.2, right? So that's where you fix your lot size. Remember, we are still going to, what's it called? Talk about risk management, hopefully tonight. Now, with risk management, based on your account size, you are going to know the lot size that you should use, right? So I'm going to just change this to the lowest lot, which is 0.01. Okay. And then if you are entering the trade immediately, you click on sell. Now, there are some options here, which I'll talk about shortly. You see something like this, you see this SL and then something TP. SL means stop loss. Take profits means take profit. So we'll talk about this shortly, all right? So let's just assume we have everything set, and then you want to click on buy or sell. So to enter a trade right now, once you've set it to be a market execution, you've put in your lot size, let's say you've set your stop loss and take profit. The next thing that you want to do is to click on either sell by market or buy by market. You can see, so sell by market means that you are selling at the current market price. Likewise, buy. So let's click on sell. Okay, so as soon as you click on sell, you are entered into the trade immediately. And then you will see this. This is the entry here on this. So immediately you click on sell, your trade will now be running. So when it's running, you can now see how much you are making in real time or how much you are losing in real time. So whenever the figures are showing in red, that means you are currently in a loss, all right? When it changes to blue, that means you are in a profit. As you can see on all of these trades that are open, right? I'm currently in a loss, all right? So when the trade starts going my direction, this red figure would show green. I said green, it will show blue. And then I know that I'm in a trade. So let's say you now want to possibly close this trade. So now we have opened the trade. Let's say the trade has gone your way and then you want to close the trade manually. All you have to do is just click on it for about 2 seconds or 1 second, you see the close position option. So you click on close position, and then you see the option to close with loss. All right, so that's how you close a position. All right, but I'm not going to close it right now because I think AUD card should still sell. As you can see, personally, this has been a swing trade. All of these positions has been open for a bit over 2 or 3 weeks now. All right, so my bias for AUD card is that it should still sell on the long run. All right, but let's just close the trade. It's just 0.01. So that I'll show you how a trade is being closed. So you want to click on the open trade, click on close position, and then you see close with loss. So when you click on close with loss, immediately the trade is closed. And then if you go to history, so if you go to history, you see the trade that was closed here. Okay, let's do just today. All right, here. So this is a trade that we just closed today. Make sense? All right, so that's how we open and close trades using the market execution. So let me know, were you able to try this by yourself on your MT5? Mr. Sunday is online. I can also see Mr. Mustafa. Give me some feedback. Were you able to load it to do the same thing on your MetaTrader 5? So we've just done something very, very basic without analysis, just to, since it's on our demo account, just to see how to open and close a trade. Mr. Sonny Patrick, please give me some feedback. Also, Mr. Mustafa, if you're able to do this on your MT5, or if it's clear what I'm doing on the trading platform, give me some feedback. So whenever you want to open a trade, you are going to be trading from your MetaTrader 5 account, okay? And then that simple process that I showed you, good, you have done it already using your PC, fantastic, right? So the same thing a PC can do, the same thing your mobile phone can also do. So let us move on. Let's talk about, so let me stop screen sharing. And then let's talk about the next market order. So we've talked about instant execution. If you are taking entry on Apple, before Apple delisted MT5, you see instant execution. On Android, I think it is market execution. So the next way to enter trade is via pending orders. And then for pending orders, we have 4 different kinds of pending orders, all right? So the first type of pending order is you have your sell limit order, you have sell stop, you have buy limit, and then you have buy stop. Sell limit, sell stop, buy limit, buy stop. Now, 2 major terminologies here that I want to explain to you to easily help you understand the concept of limit and stop orders. So this is where I learned it and how I understood the concept. I think it will also be helpful if I teach you how I learned it. Okay, so we have when it comes to pending orders, we have 2 major orders, right? We have the limit orders, and then we have the stop orders. So for limit orders, what do we have? We have sell limit and buy limit. For stop orders, what do we have? We have sell stop and we have buy, stop. Okay. So understanding limits, when we say limits, what I need you to have at the back of your mind. So limits, when you hear limits, when you come to forex trading, I want you to think about reversal order. And then for stop, I want you to think about a continuation order. Okay. So let's take the first example. For a limit order, we have the sell limit, right? Let me bring this up. Okay, so we have the sell limit. If you are entering a sell limit order, remember they are all pending orders. So there are ways whereby we want to take entry in the market. Okay, so let's deal with sell limit first. So when we say sell limit, what exactly are we talking about? So for a sell limit order, we are trying to enter an order for a sell to initiate price reversal. Okay, remember limit means reversal. So to enter a sell limit order, that means we want to enter a sell order. Okay, and that sell order should initiate a reversal. So visually, what it means is that, so let me use this tool. So let's say price is currently going up. Price is on an uptrend or is just ranging up. And then based on your analysis, you think or you predict that price is going to reverse at a particular price. So maybe that price is somewhere at the top. So a sell limit order, remember, limit means reversal. So at this particular price is where you would like to enter for a sell. And the beauty of pending orders is that once you set it, even if you are not online, the system will take you into the trade as soon as price gets to your pending order, right? So for sell limits, you want to enter for a sell at this price. So you are telling the system that when the exchange rate moves up and touches this price at the top, right? I want to be entered into the market for a sell. Okay, so that's a limit, that's a sell limit order. All right, so to set a sell limit order, okay, the price at which you want to take entry from has to be above the current market price. For a sell limit order, the price at which you want to enter has to be above current market price. So let's assume that this was the current market price. Let's use another color. Okay, this yellow line was the current market price. So when price was here, based on your analysis, you think that if price gets to this high, you think it's going to start dropping. But maybe you are busy, you need to go to work, so you don't want to be actively on the chart. So on your MT5, you can give an order for a trade to be placed when price gets to this point. So all you need will just be the price at this particular point. So maybe that will be 1 point something, okay? And then you do that. So as soon as price starts going up and then gets to this price point, immediately you'll be entered into the trade, just like the way you did market execution. Okay, immediately price touches this zone, you'll be placed into the market for a sell. Okay, the same thing goes for a buy limit. For a buy limit, so let's assume that price is going down currently. And based on your analysis, you think that this downward movement is going to end and then a reversal will start taking place. So this is the current market price. So for a buy limit, you want to set an order somewhere below And then you are saying that if price should continue going down and then it gets to this price point, I want to be entered into the trade for a buy. So that's a buy limit. So when you enter for a buy, okay, that's a reversal. That's a reversal order. So that's why limit orders, okay, think about reversal orders. So that's how it is. Another way that you can master it visually is to look at a sell limit order as a U, okay, U, and then think of buy limit order as a N. So these are just cues that I put in my head that makes me know the limit orders to use at a particular time. So you don't really have to cram it. You just need to understand this particular concept, right? So limit orders is reversal order. Stop orders are continuation orders. Now, all of this will come to play once you start grasping the importance of analysis. So as you grow in your journey of Forex trading, you will start understanding the Forex market a whole lot better than you do currently. And then you'll be expecting price to get to some certain points, right? And it will make sense to use pending orders for those particular trades. So that's why it is important that you are aware about pending orders. So let's talk about stop orders right now. So a stop order, unlike limit order, okay, is a continuation order. So let's start with a sell stop, right? So for a sell stop, what it means is that I want to continue the sell. I want to continue the bearish move. Okay, so let's assume that price is already selling. Price is selling, is going down. Okay, so a sell stop. So based on your analysis, you feel that maybe if price gets somewhere here, based on the pressure, if price should break this zone or get here, you want to continue selling. You want to enter here for a sell. So when you set a sell stop, let me write this, sorry. When you set a sell stop, that means, remember, stop orders means continuation order. So when price comes back down into this place, right? As soon as price touches here, this price point, and then it is a sell stop, immediately you'll be entered into this trade for a sell. So that's a sell stop. So you are continuing, is a continuation of the move. That's why a sell stop. Buy stop, on the other hand, is just the direct opposite. Okay, so for a buy stop, you want to continue the buy. So let's say price is going up, like so. Okay, for a buy stop order, you want to set a price above, this is the current market price. So a price above the current market price, that is somewhere here, so that if you set a buy stop order and then at this price point, if price for any reason should keep going up and touches this zone, immediately price gets here, you'll be entered into this trade for a buy, okay, to continue the move. So stop orders means are continuation orders, while limit orders are reversal orders. Okay, so these are the easiest way that I think you can understand what pending order is. So let us go back into our MetaTrader 5, and then what we're going to do is to use each of these orders. So we're going to set a sell limit order and then a sell stop order. Okay, so I'm going to stop sharing this, and what we're going to do is I'm going to share my MT5 on my mobile phone. And then we're going to go here. Okay. So we are on, let's deal with AUD card. So you want, this is a chart for AUD card. Okay. So over here. Good. So this is price right now. So price is currently, let me see if I can make this, give me a second. Let me see if I can make this bigger. Good. So this is price right now. Let's start with a sell limit order. Okay, so for a sell limit order, limit orders are reversal orders. So for a sell limit, I want to sell at a price currently above current market price. So right now, this is the current market price right here. So based on my analysis, I feel that price is going to come up all the way to this price point. Okay, so let's say that the 0.92790 price. So based on my analysis, what I want to do is that whenever price comes up, goes up into this zone, I want to be put into the trade for a sell. So that's a sell limit. So that's a reversal. So how do I do that? Let's clear that up. How do I do that? You want to open a new trade. Okay, so go to your quotes, you tap on the currency pair, click on new order. All right. And then what we do, you're going to click on market execution, and then you select sell limit. Okay, so what price point did you say you want to look at? So 0.92790. 0.92790. So sell limit, you put your lot size, and then the price they'll ask you. So that 0.92790. It's as simple as that. So that's how you set it. And then once you get the correct price point, you put it, and then you click on place at the bottom. So it's done, sell limit. So you can see it on your trades tab now. You will now see your pending order waiting patiently for price to get there. So right now, the trade has not been active, is not active yet because price has not gotten to 0.92790. Okay, so if you go back to the chart, you see that your pending order is not there, is now waiting for you here. So whenever price gets up into this zone, immediately will be entered for a sell, right? On the flip side, a sell stop is very simple. For a sell stop, what are we doing? Is a continuation order for a sell stop. So that means we want to continue selling. So for a stop order, you want to place the order below current market price. So price, this is current market price, so below. So let's say somewhere here. If price keeps going down, if price retraces and then gets here, if my sell stop is active at this price, I want to be entered into this trade for a sell. That is a sell stop. So continuation. So what do? I just get the price. So that is 0.91170. Okay. So we'll go to our quote, 0.91170, new order, change it to sell stop. Then put your price there, 0.91170. Ensure that you set your lot size very carefully. Now, this is one way that people usually blow their accounts unknowingly to them. before you place any trade, please remember to always double check your lot size. Okay, there are times that the lot size based on server might reset, or you might just, anything might have happened that would have changed the value of this lot size. So ensure that you are very, very present and conscious of the lot size at every point in time that you want to place a trade. Is very, very important, because I've had scenarios whereby people tell me that they wanted to use 0.01, but maybe because they were doing demo or something, and in their demo accounts, they were using 1.0. So somebody that wanted to use 0.01 and mistakenly, by default, 1.0 is on the lot size tab, that person would obviously take a huge loss if they take a loss, and obviously take a huge win if it's a win. But you want to be very, very careful. Very, very important. So once you set your lot size, you set the price point for your pending order, you click on place, and then you're good to go. So that trade will also now be waiting for you, like so. So when you go to your chart, your order is waiting for you right here. So that's why it's called pending orders. So you are not entered into the trade immediately. So you are waiting for price to get to this, either of these zones. So when that happens, you'll be put into the trade immediately. So the same thing that you do for a buy stop and then a buy limit. Okay. So likewise, you can cancel a pending order as well. So let's say you don't want to let it be active anymore. Just tap on it for about 1 or 2 seconds. You see the option to delete order. So delete order, if you want to remove it completely, or you can use the modify order if you want to modify the parameters. All right, but let's delete it since we don't need it. So I'm going to delete it, and then it's off immediately. Delete the second one, and then it's off. All right, so that's how easy it is to open pending orders. So you've learned how to open trades on market execution, instant execution. You've also learned how to open trades using pending orders. Okay, so let's talk about the next concept, which is stop loss and break even. Stop loss and break even real quick. So let's share our screen. Good. So the concept of stop loss and take profit, I beg your pardon. Stop loss and take profit is very, very important when we are trading. So stop loss and take profit. So when we talk about stop loss and take profits, what I want you to have at the back of your mind is something called exit. So these are points where you want to exit a trade. Okay, trade exit. Okay, so these are prices where you want to be taken out of a trade in either a profit or loss. So stop loss is a price that you set to stop your losses. So if for any reason the trade does not go your direction, when price gets to that particular point, that will minimize your losses so that you don't lose all of your trade. So let me give you a visual example. So let's say this is a point where you took entry. So let's call this entry. This is your entry price. So you entered a buy here. So for a buy, price is meant to be going up. Okay, but unfortunately, price is not going up. Price is going against you. And what you must notice that as price is going against you, gradually you are losing money, right? You are losing money. So in order for price not to go aggressively against you and then take all of your capital out, you want to set a price, a zone in the market, such that if price for any reason gets to this point, so let's call this point our stop loss or SL, stop loss. So this is your stop loss. So if for any reason price should go against me, I'm supposed to be in this trade for a buy. Remember, this is a buy order. And then for buy, you are anticipating that price will go up for a buy. But price is not going your direction. It's going against you. It's going down. So that you don't lose all of your accounts, your stop loss limits your losses. So that's why it's called stop loss. So it stops loss. So when you set the price of your stop loss, as soon as price gets into this place, immediately you'll be taken out of the trade. Immediately. And you don't have to be online for that to happen. Once you've set your stop loss at the beginning of your trade, okay, immediately, if price should do this, you'll be taken out of the trade in a loss. Okay. On the flip side, if price starts going your direction, starts going for a buy, okay, so it makes sense not to be greedy and trying to catch all the move. Based on your strategy, you have a take profit level. So let's say here. So a take profit is also an exit point in the market whereby you want to exit the trade in profits. So when price gets your take profit, you'll be taken out of the trade in profits. So TP, take profit. So price is going your way, is going your direction. Whenever price hits this price, immediately MT5 is going to close that trade in a profit. All right, and then that happens even if you are not on your MT5 or you are not even online, right? So stop loss and take profits, very, very important when we are taking entry. Okay, I recommend that even if you will not put take profits on your trade, ensure that you are always using a stop loss. Try. Okay, don't leave your, at least for a beginner, don't leave your trade open without a valid stop loss. All right, so that's a rule that you have to hold there. Okay, so on the flip side, let's do for a sell scenario. So for a sell scenario, let's say this is your entry. So let's use entry as E. So you took an entry here for a sell. And then when you are selling, what are you anticipating? You're anticipating that price is going to drop, right? So where is my arrow? Give me a second. Here. So if you are selling, that means you want price to drop, isn't it? So if price is dropping, so let's say price that is meant to go down, price is now going against you. It's not going your way. It's going against you. Okay. As it is going against you, you are losing money, your capital, in real time. Right? So because you don't want to lose a big chunk of your capital or even all of your capital, you need to have a stop loss. So a stop loss is a price whereby as soon as the market gets to that price, you'll be taken out of that trade immediately in that loss. So stop loss is the maximum amount of loss, okay, that you are willing to have on that particular trade. Okay, so over here, so let's say this right here is your stop loss. So that is, stop loss is SL, right? Good, over here. So when price keeps going up and then gets here, you'll be taken out of the trade in a loss. So let's say price is going, as the price gets up here. So if price approaches it, but does not touches it, but does not touch it, you won't be taken out of the trade. It is until price touches this zone that the trade will close, right? So let's say price started going your direction, okay? Now we start talking about take profit. At which price point do you want to be taken out of that trade in a profit? So that's a take profit. So it's going your direction. So let's say somewhere here. Okay, so for take profit, that's TP. That's TP, right? So when price is going down and then eventually gets to this particular price, immediately you'll be taken out of the trade in a profit, right? And then remember how we did a practical about how to close trade. So either before price gets to your stop loss or before price gets to your take profit, you can also close the trade manually. You don't have to wait for price to get your TP before you take profits. You can close your trade manually, okay? So that's the beauty of the system. So take profits and stop loss just helps you have better trade management, okay? Because there are times that if you don't use a take profit or stop loss, and then maybe price is approaching your your total loss area, and then you want to close that trade manually. So there are times that your internet might not be active, or there are times that your battery might be low, or there are times that a lot of things can go wrong at any given time. But if you have set your stop loss and take profits, nothing can go wrong with that price. So price would always take you out at those zones, okay? Only on very, very exceptional times whereby there is huge, maybe slippage, or like there's an aggressive move in the market. There are special times in the market whereby when you set your take profit or stop loss, okay, price might ignore your stop loss or take profit and then just bounce off. It happens very, very rarely. And then when that happens, or if that happens, all you have to do is to reach out to the Forex broker, and then you'll be given a refund on that particular trade. Okay, so there's no issues about that. You just need to send them your trade, and then they'll check it out and then see that it is their fault. Okay, it's not their fault actually, but the fault of liquidity providers. A lot of complex things can go wrong. Okay, but that happens very, very rarely. Okay, so let's go back into our MetaTrader 5 right now and then show you the price point that you can use for your stop loss and take profits. Okay, so okay, Mr. Idris is asking, how do we determine the entry price on a long or short? Good question. So that is when we start talking about strategy. So it is your trade strategy or your trade plan that will determine your entry price. But we are not quite there yet. This particular webinar is a foundation class. So we are just talking about the basics in this training. So we won't really be talking about trade strategy immediately. So with time, possibly sometime, not this week, Tentrade would organize more events to teach us strategy, but do well to always join. We usually have advanced classes Mondays and Wednesdays every week, where we analyze the market together as a team, and then we spot entry point in the market. Okay, so Mr. Idris, every Wednesday and Monday, we analyze currency pairs together, and then we pick what to trade for the week. So in those classes, I will also be telling you to take entry at this point, to take exit at this point. Okay, I hope that makes sense to you, sir. Okay, so I'm going to go to MT5 right now. Let me stop this. And then what I want to do is very, very simple, is to show you how to put stop loss and take profit. Okay, so let's go to quotes. So let's say I'm mentioning a random. So let's say Euro USD. I want to enter a trade for Euro USD. So market execution, and then I want to, let's say I want to sell this Euro. So let me just show you visually. So I'm going to click on it, and then let's show ourselves the chart for USD. So if I'm selling Euro USD, oops, give me a second. So I'm selling here. So this is the entry price. If I'm selling, that means my take profit is going to be below, and then my stop loss is going to be above. Okay, so that's if I'm selling. If I'm buying, it will be the flip. It will be the flip, right? So that means I'm going to now, so all of the stop loss and then TP to use will be given to you by the trade, by your trade plan. So once we start talking about strategy, you will know the price point to use for your stop loss and then your take profit. So I'll just pick a random zone right now. So let's say this is my entry point. And then for a sell, I want to use this zone as my take profit, that is 1.05320. And then my stop loss, I want to use this zone right here, 1.06820. 1.06820. Let me write this down so that I don't go back and forth. So my stop loss is going to be 1.06820. Take profit is 1.05320. Okay. So Mr. You're asking a question. Okay. So what you do is very simple. The person that gave you the link to join this class, kindly tell the person to add you to the WhatsApp group. I think it should be Mr. Victor that sends the link. So there should be a special group where where communication will go on. So every Mondays and Wednesday, you get a special link. Or what you can do is to please reach out to your account officer on Tentrade, and then let them know that you want to be a part of the Monday sessions, right? And then the link will be given to you to register, right? So let's move on. So I want to enter a sell on this guy. So new order, Euro USD. I'm entering with market execution. I put my lot size 0.01. Now, because I'm entering at current market price, all I need to do is now set my stop loss and my take profit. So there are two ways to set your stop loss and take profit. It is either you put the price before you click on buy or sell, or after you click on buy or sell, you can modify your order and put it. So let me give you an example. Okay. So let's say you are entering the trade before putting your stop loss and TP. So I'm entering for a sell right here. Okay, you can see the trade is already running. So what you can do is to now put your stop loss and take profits, just hold on the trade for 1 second and then click on modify position. So it will give you option for your stop. So you want to put your stop loss there, 1.06820. You put your TP as well, your take profit, 1.05320. And then you click on modify. Okay, so whenever price gets to either of your stop loss zone, you can see, so when you tap on the screen, it will show you your SL and TP. So whenever price gets into either of those zones, you'll be taken out of that trade in profit. It's as simple as that. So because this is not a trade that I want to take, I just go ahead and close it, close position. So I'm closing with a profit now, a little 10 cents or 8 cents profit, okay? Then I'm done. So that is how you set your stop loss and then your take profits. It's very, very simple. The same thing that you would do if you are entering, if you're entering a pending order as well. So we've touched on some really, really good concepts. So let me get your feedback. If you understand what I'm doing or what I've done so far, kindly type in yes in the chat box. If you don't, type in no. So this is a workshop, so I'd like to get your feedback. Let me know if you understand. If not, just gladly mention and then I'll probably revisit if I can. Okay, just type in yes in the chat box if you understand, or if you have a particular question about what I've been saying since the last 1 hour, you can ask your questions and then I will clarify for you. Okay, so I'll just wait for a few more seconds to get your feedback. And then if not, we'll just go ahead. Okay. Okay, so I guess there are no questions. So that means it's quite easy, isn't it? So Mr. Idris is asking, okay, we have a question. Can you clarify the buy stop and sell stop pending orders? Okay, I'll do that. Let's do that. So buy stop and sell stop is a question. So let's start with buy stop. So buy stop and sell stop, they are all stop orders, and then stop orders means continuation orders, if you remember. So buy stop here. So for a buy stop order, so price has to be like this exactly. So if price is going, I beg your pardon. For buy stop, price has to be going up. So if price is going up, okay, so you want to buy, so buy stop. And then what does stop mean? I said stop means continuation. So buy stop means I want to buy the continuation, okay? You want to buy the continuation. Okay, so if price is going up, so buy stop is based on your analysis. Maybe you feel that price is going to come to somewhere here. So if price get here, if you have set a buy stop at this price, that means if price should get to this place, you'll be entered into the market for a buy. So when price gets here, okay, you'll be put into the market for an immediate buy. Okay, so that is buy stop. So it's a continuation pending order. All right, now let's talk about sell stop. Sell stop is a direct opposite of buy stop. So for a sell stop, price has to be going down. So for a sell stop, you want to sell the continuation. Okay, for a sell stop, we want to sell the continuation. So price is going down, right? And then based on your analysis, you want to continue selling when price gets to a particular point. So when price gets to somewhere here, so this is where you set your penny order. So when price keeps going down and then touches this point, immediately you'll be entered into the market for a sell. Okay, so that is sell stop and buy stop. So do you understand, Mr. Idris? Give me some feedback in the chat box if you understand this concept. Awesome, awesome, good. So let's talk about the almighty support and resistance, and then we'll talk about risk management. So so once we talk about those two concepts, that's what we are going to end for this particular boot camp. So what we are planning on from January, which is in a few weeks' time, is to have a more robust beginners class. Okay, so ideally, 2 days isn't usually enough to really teach us all the basics of Forex, right? But because our itinerary is just 2 days, so we are like trying to put everything on that 2 days. So from next year, January, we are going to be having a more robust session whereby for the course of, let's say, 2 weeks or 3 weeks, we can really have ample time to really teach effectively for people that are beginners. So if you're around at the time, you can still join in to learn. But again, as you keep joining the Mondays and Wednesdays sessions, okay, the advanced classes will rub off on your knowledge of Forex trade, and then you start improving naturally, okay? So let's talk about the concepts of support and resistance real quick. What is support and then what is resistance? Now we are talking about, these are resistance, okay? Support and resistance. So support and resistance are, this is technical analysis, okay? Let's write it down. All right, so is a technical way to analyze the market. So technical analysis, all right? So support and resistance is a concept under technical analysis. So there are different ways to analyze the market technically. Support and resistance is just one of the ways, one of the technical ways whereby we view the market. All right, so why are we analyzing the market? Because we want to figure out where to buy and then where to sell. Okay, so Mr. Idris asked a question a few minutes ago about where to buy, where to take entry. So now support and resistance, which I'll explain to you, in itself is not enough to give you strong confirmations for entry. Okay, so it's just like a starting point where you can start from and then give you a proper understanding, not a proper understanding, but a bit of understanding of, of how the market works, how to view the market and analyze the market. So the first concept that we'll talk about, like I said, is support and resistance, right? So when you hear support and resistance, what I want you to have at the back of your mind is reversal zones in the market or areas of reversal. Okay, so reversal zones. Okay, or think about reversals. Okay, yes, so reversal zones and reversals. So areas of reversal, so where we see reversals in the market. So, and support and resistance are zones in the market is simply using historical data to predict the future. So what are we using? Excuse me. We are using, when we spot a support and resistance zone, we are simply using historical data to predict the future or what will happen now, to predict the future. Okay, I've already written down. All right. So let us get to it in real time. So this will make a lot more sense to you once you start defining each of these concepts. All right. So let's start by defining what support is. And then we'll shed more light on this. So a support is an area of the market that acted as a floor, right? So a support is an area in the market, is a zone, is a price zone that acted as a floor. Okay, so just like the floor that you are sitting on right now, or you are standing on right now, if you take your pen and then you drop your pen on the floor, most likely it will not go beyond the floor, except you use a very, very strong force. Okay, maybe you threw the pen from space, right? And then the force is coming with a very, very high velocity and then hit the floor. Maybe it can penetrate it. And then maybe your floor is not strong enough. It can penetrate it. But ideally, in the foreign exchange market, we say a support is a zone in the market that acts as a floor for price, so that when price gets to that particular zone, we tend to see a reversal. Okay, so let me give that to you visually. All right, so let's say this is a support zone. So that we are going to say this is support. So I'll explain to you shortly how we find support. Floor. Okay, so remember how price moves. Candlestick. So we see price moving all the way down. And then when price gets to a particular point, immediately we see a reversal. Okay, a reversal means a change in direction. So price was coming downwards, and then suddenly you see that price got to a particular point in the market, and then you see a sharp reversal. You cannot miss it. You see that there's a change in movement. So what happened is that over here, okay, price hit a support. Okay, so that's a support zone. So what is the ideology behind support? Remember, I said that we are using what? Historical data to predict the future. So the idea is that because in the past, so we are drawing this support zone now based on what happened previously. So now we want to use that information to predict what will happen later on. If price should come back into this zone, what should we be expecting if price gets back into this zone? So because the last time that price entered this zone, we saw a reversal, right? So the theory of support and resistance says that once this zone has acted as a support in the past, then possibly in the future, it might act as a support as well. It's just like saying in Nigeria right now, Nigerian president, let's say Buhari right now. So Buhari entered government 2015, if I'm correct. And in 2015, he performed very, very woefully, really, really bad. So that is the history. Now, Buhari now wants to contest again in 2022. Because of what you have seen Buhari do in the past, you are like, man, this guy, because of his antecedents, okay, we think is going to perform poorly again. So we don't want to vote for him. Okay, so if he's contesting again, we are going to be expecting him to also perform poorly. All right, so that's the idea behind support in this case. So when price comes back into the zone in the future, you'll be expecting to buy here. Okay, so that's the concept of support and resistance. So in essence, what do we do at support? We buy at support. But like I told you, support and resistance, they are not stand-alone strategies to take entries. So you can't really use it as the only yardstick to take entries. You have to use other confirmations to take entries, but it helps to know, to be able to interpret market movement. All right, so you buy support. And then there are also times that support zones don't hold. Okay, in fact, there are many times that a support zone will not hold. So price might hold the second time, or maybe the third time that price is coming back into that zone. You can see price breaks it. Okay, so a support zone can be valid or invalid. So that is why we don't only look at support or resistance to take entry. Okay, so that is what the support is. Now I'm going to explain what a resistance is, and then we'll go to the chart, and then we're able to spot the zones. Okay, so the next concept is resistance. Okay, so resistance, think about resistance as a ceiling. So the ceiling of your apartment right now, when you throw a ball up, when that ball hits your ceiling, it's going to come back down most of the time, okay? Except you throw that ball with a very, very strong force, or the ball is made of a very, very rocky substance, okay? And then maybe it can penetrate your ceiling, right? So a resistance is a zone in the market that acts as a ceiling. So resistance zone, resistance. Think of it as a ceiling, okay? So that will help you understand it properly, such that when price is going up like so, and then price only gets to a particular point in the market, and then you see a very sharp reversal, change in market direction, market movement. Okay, so what happened there is that price hit a resistance. Price hit a resistance zone. So that's what happened there. So This is historical data. Now that we know that price reversed here, we now want to use this historical data to possibly predict what will happen in the future. So the next time that price will come into this zone, what we will now be anticipating is a reversal, because in the past, this zone acted as a reversal zone. So whenever price should come back into the zone, we are possibly going to be looking for a reversal, for a sell. Okay, so that's why we buy at resistance and then we, I beg your pardon, we buy at support and then we sell at resistance. We sell at a resistance. So in a resistance zone, you are looking to sell, and then in a support zone, you are looking to buy. And then a lot of times as well, price might just break a resistance zone and just totally ignore it. All right. So support and resistance don't always hold. Okay, it's not 100%. But what it will help you do is to help you interpret price, okay, as much as possible. Technical analysis. So this is the first concept that you really want to have. Okay. So Mr. Idris is asking, how many times should price hit the support or resistance for a confirmation alongside other strategies? All right. So there are different ways to look at this. I don't want to go too deep at first, because how you use support and resistance depends on the trader. There is no real way. Minimum is 2 touches, but there are some people that don't use 2 touches. There are some people that use 3 touches before that zone is established to them. Okay, and then there are a whole lot of things involved as well. So all of that, we will talk about it when we start talking about strategy, right? But what I want us to understand right now is just the general concept of what a support is and what resistance is. So I'm not talking about specific entries right now, but good point that you made, Mr. Idris. General knowledge out there is that what makes a support or resistance zone valid, minimum, you want to have 2 touches in that support or resistance zone. So this, in this case, is the first touch, and then this is the second touch. Okay, in this case, this is the first touch, this is the second touch. So when you have 2 touches, the next time that price would come into that zone, you're now waiting for a reaction here for a buy. Okay, so that's why buy support. Likewise, the same thing for resistance as well. I hope that makes sense. All right, so that is support and resistance. So let's go to the chart and then identify these areas of support. So this is AUD card, and then this is the daily chart. So the first thing that we are going to be doing is to identify those zones. So let's start by identifying a support zone. Remember, we said that support is an area of the market that acts as a floor. It acts as a floor. Okay, so let's just use this body of time here to explain this particular concept. So I'm going to start from here. Okay, so let's just randomly, we just want to identify reversal areas, support. Okay, so over here is a support, is a zone. So we can see reversal here like so. Okay, we can see reversal here like so. All right, and then we can see reversal here like so. All right, so I think I should also add that when you are trying to mark out a support zone or a resistance zone, they are not actual support and resistance zone is not a price in the market. It's a zone. That's what it's called. It's a reversal zone. So I would recommend you to use the last candle before the reversal. So in this case, when price was coming down like so, and then you can see this reversal up here. So this reversal took place. So how do I highlight a support zone using this reversal? The best way that you can do it is to use the last candle, okay? The last extreme candle, in this case, this red candle before the reversal. So the last candle before the reversal. So all of this zone is a support zone. So this is support, this is a support, okay? So in this case, let's use, so to make this clearer, let's use this particular place. We can see reversal here. So I'm going to just drag this here. So the last, let's use here. Good. So we've highlighted about 3 support zones right now. So let's explain how they come to play. So over here, what do we see? Let's make this bigger. Again, we are just doing this to explain how support works. Generally, we are not going into intricate details as to how to use it to take entries. We are just explaining what a support is and what resistance is and how prices react at a support zone or resistance zone, okay? So over here, what can we see? We can see price coming down like so, or let's use this. Price coming down like so, okay? And then price going up with this move. So that in itself made this a support. And then you can see price came back down into the zone again. And then we can see price going all the way up. So this in itself, if you are using your concept of 2 touches, okay, this is the first touch, this is the second touch, okay, and then we can see that huge displacement like so. So if that happens, we now say that this support zone is what is valid when there are 2 touches. So the next time that price gets into the zone, you're expecting price to act as a support. So you're expecting a reversal here. And then as you can see, price tapped into the zone, and then we can see that little reaction over there. Okay, so you can see next, so this was valid for this move. The next time that price came into the zone as well, you can also see a little bit of reaction here. You can see how price reacts to support and resistance using this example, okay? So there are just areas of reversals in the markets where we are expecting to take a buy or sell. In this case, support, we are looking for a buy, okay? So next one is this particular support. So we can see price coming into this zone for the first time, and then we see this aggressive change in direction. So we have to mark it out, okay? So the next time that price came into the zone, you can see this is the second touch, and then price really moved all the way up. So first touch, second touch, okay, might be valid enough for people to start to consider this as a support. So the next that price came into this zone, you can see price struggling in this zone, but eventually the zone was broken, and then we can see a little bit of retracement. Ultimately, the support zone did not hold price as it should. So this is an example of a failed support, but but you can still see how price reacted at these zones. Okay, so that is an example. Let us go to another support. So this is another support. So let's use all this candlestick right here. Good. So we can see price coming all the way down here, right? And then what did we see? We can see a bit of displacement at the top here. Price came back down to the zone. So this in itself, we've highlighted the support zone like so. First touch, second touch, price came up. Third touch, you can see third touch pushed price up, right? Fourth touch, price came back still in this support zone, and then ultimately this support zone pushed price all the way up. All right, so there are some support zones that will not hold, and then there's some support zones that will hold very, very strongly. And then you can see this support zone pushed price all the way up until this point. Okay, so as we go along in our knowledge of trading, you start understanding the concept of major zones and minor zones in the market. So there are major support zones and then there are minor support zones. But I don't want to get too technical because these are our second day learning Forex. What I want you to understand today is just the general perspective of what a support is and what resistance is. So in a support zone, you want to look for buys. In a resistance zone, you want to look for sells. So your assignment is you want to go on any currency pair, any time frame, and then what you want to do is you want to start marking out your supports and resistance. So just go on any time frame of any currency pair and then play with it, right? So spend time to, give me a second. All right, so spend time to mark out support zone. So you can use a line or use a rectangle, just mark it out and know how price reacts to a support, right? You don't have to be correct all of the time, but just spend time and just mark it out. As you're marking it out, gradually, you'll be able to interpret market movements a lot better. You start adjusting to, understanding how price moves. Okay, it's a very, very important thing that you need to do. And then as you're doing it, you start understanding major zones, minor zones. You start seeing how a support zone is active, how a support zone is being violated, and what happens after. Okay. All right. So good. So that's that about support. So your assignment, don't forget, go to any currency pair and then mark out a lot of support zones, a whole lot. Okay, as much as you can mark out. Spend at least 30 minutes just drafting out these zones and seeing how price is reacting at those zones in the future, right? So the next thing that we're going to start marking out or drawing out is our area of resistance. So we talked about support. Now let's talk about resistance, how price reacts to resistance. So let's do this quick because of time. So we have less than 10-15 minutes for this session. So let's use this example. All right, so over here, we can see price here like so. Okay, let's see if take to the future. What do we have? Resistance zone. Okay, this is also another resistance zone. Okay, a lot of resistance zone. This is also another resistance zone. Okay, so let's just do these three for now. So let's assume that this is the first time that we are going to see a reversal in this zone. So you can see price coming here like so. Let's make this bigger. Price coming here, so you can see, and then ultimately we can see this pushback like so. Okay. Once we see this, we are seeing some form of reversal. So this zone is already a resistance zone. And then you can see price pushing back up, okay, into this zone. So, and then we are seeing another reaction, price coming down. The third time, price came back up, still in that zone or a bit above the zone. So if you have done this, you can see price came back up into that zone. And then what did price do? Price came all the way down. The fourth time, price came back up into the zone, and then ultimately that zone was still very, very valid. And then that pushed price all the way down. So it is at this point, historical data now, because this has happened in the past. In the future, you'd also be expecting something to happen. So in this case, you were right with this resistance zone here, and then that pushed price all the way down. So the next time that price will come up there, let's see. So next time that price came there, so you can see it was still active in the future. And then ultimately the zone still push price all the way down. Okay, so that's a very, very good one. Okay, so let's remove all of that. Okay, so let's talk about this next resistance that we spot that we here. So we can see how price push into the zone like so, and then we can see a little bit of reaction here. Let me zoom in. You can see a little bit of reaction to the downside here. And then second touch, this green candle, price going on the way up, touching it. So this is an established resistance zone. So the next time that price is going to come up here, let's see in the future, if price should come up into this zone, are we going to see a reaction in the future? So you can see next time that price came to this zone is with this move here. And then we saw a bit of reaction to the downside. You can see. So we are using what happened in the past, right, to figure out the possible scenario for what to happen in the future. So support and resistance helps you to know, to predict, to have some form of prediction, to know where to buy or where to sell. So this is the most basic form of technical analysis, right? So like I said, what I want you to just understand in this class is just general application, general overview. And most importantly, I need you to be able to spot a support zone and resistance zone by yourself. And in order for you to be able to do that, you need to actually spend some time on the screen, on the chart rather. So you need ample time that you devote to the chart. And then what we'll be doing is to look at what has happened on the chart, and then you just want to start mapping out a support zone and resistance zone. Go on different currency pair, go on different time frames, and then just mark it out. Spend time to really spot it so that when it is now happening in real time, you'll be able to spot it and know where to expect a reaction. Okay? Can you give me some feedback in the chat box if you understand what I'm talking about? I think Mr. Idris already understands support and resistance zones. because you are asking some very, very interesting questions that only people that understand those. Let me know if you understand in the chat, or just type in a yes or a no if you understand. For people that will be watching the replay of this session, if you don't understand, don't worry, we'll be doing a monthly beginner session. You can, of course, join the next one, or just simply join our weekly sessions, Mondays and Wednesdays, to ask your question. Okay, so Mr. Idris is asking, what time frame is ideal for marking a support and resistance? So there is no ideal time frame. The ideal time frame to use will depend on the kind of trader that you are. So I love your questions, Mr. Idris. It's making me go deeper into this concept. So let's just digress for a bit and then talk about, there are three major kinds of traders. Generally, you have some people that we call scalpers, and then there are people that are intraday traders. Then there are people that we call swing traders. All right. So who are scalpers? Are traders that like to, they want to quickly enter a trade and then quickly exit the trade. So most times a scalper is taking entry on the 1 minute chart, one minute chart, or let's say the 30 seconds chart. So they are looking for quick and swift moves in the market that they can quickly capitalize on. So a scalper doesn't have the patience really to stay in a trade for so long. So they are scalping in and out, quick in and out moves in the market. So mostly they trade on the 1 minute chart or the 30 seconds charts. Intraday traders, okay, these are traders that are willing to hold a trade, okay, for a few hours in a day, okay, or like a day, 2 days max. So an intraday trader will naturally be trading on the, let's say, 15 minutes, 30 minutes, or the 1 hour time frames. Okay, so a scalper can also take entry on, let's say, a 5 minute chart. Okay, so but intraday, the average time that an intraday will spend on a trade is, let's say, 24 hours on the average, or 2 days, right? A swing trader is a trader, they are willing to hold a trade for a longer period of time. So they have the patience to hold a trade for several days or even several weeks, right? As the market presents to them. So swing traders will usually take entry on the 4 hour time frame, okay, and then some on the daily time frame. So now back to your question, Mr. Idris. You are asking what time frame is ideal for marking a support and resistance. So the ideal time frame will be based on the kind of trader that you are, right? So if you are a swing trader and then you are taking entry on maybe the 4 hour chart. So ideally you want to give preeminence to a support zone higher than 4 hours. So maybe a support zone on the daily time frame or the weekly time frame, right? That's ideal for you, or even on the 4 hour time frame. If you're a scalper, you're giving preference to maybe the 30 minutes charts or the 1 hour. If you're an intraday trader, you're giving preference to, let's say, the 1 hour, the 2 hours, or 4 hours. So there's no ideal. It is ideal based on the kind of trader that you are. I hope that is clear enough. But one thing that really stand out for you is once you start learning a real trading strategy, then you can interpret that strategy to suit the kind of trader that you are. All right. Awesome. All right. So let's talk about the last thing for tonight, or the last two things for tonight. Let's talk about the concept of trends before we now talk about possibly risk management. Let's talk about trends real quick. Okay, so when we talk about trends, what are we talking about? So let me delete this. So trend, there's something called trends in the market, in the Forex market. Trends. All right. So there are two types of trends in the foreign exchange market. You have the uptrend, and then we have the downtrend, like so. Okay, so we have the uptrend. And then what do we have again? We have the downtrend. So remember yesterday we're talking about the bear market and the bull market. Okay, so a bull market is the uptrend. So these are terms that some people will use. Let's say bull market. And then for downtrend, can call it what? The bear market. So for an uptrend is a market trend so that the price is going up. So that currency pair is gaining value, an uptrend. And then for a downtrend, that currency pair is losing value. So that means price is going down. And that movement will be represented using the candlesticks, right? Our Japanese candlestick. So now let's give a more realistic view as to how a trend is. Now, I said that an uptrend is when price is going up, like so, right? But ideally, in an uptrend, price does not move in a straight line, like so. So price moves like this. Let's do that real quick. Price moves in a zigzag format. So in an uptrend, you have something like this, right? So this is how an uptrend looks like. Okay, so an uptrend looks this way. So let's just label some things real quick. So a standard trend, how does a standard uptrend look like? It looks like this. You have the first move is called the impulse move. The second move to the downside is called the correction. And then the last move is called impulse. So a trend is made up of what? Of an impulse move. So this move is impulse. The first one is impulse. And then the second one is a move called the correction. You can say correction or say a retracement or pullback, depends on you, but the ideal word is correction. It's a corrective move. And then the last one is impulse. All right. So impulse, correction, impulse. Good. Now let's go a bit deeper. So let's mark it out again like so. So in going deeper and looking at the anatomy, we can label each of these starting points and end points. All right, so this starting point for an uptrend, this is called a higher low, or just say HL, higher low, right? We have a higher low, and then we have a higher high, like so. HH, right? And then we have higher low here, and then we have higher high here. Okay, so we say an uptrend is like this. So when higher highs keep forming, you say price is in an uptrend. So price can still go down, correct itself to form a higher low, and then break this previous high to create a new high. So that will be your new higher high, like so. Higher high, and then this is a higher low. Okay, so a trend, an uptrend is made up of higher lows and higher highs, higher lows and higher highs. When new higher highs are being formed, price is continuing in that uptrend. Okay, price is continuing in that uptrend once higher highs are being formed. Okay, on the flip side, how do we know how a downtrend looks like? It's the same thing, but just flip it. A downtrend is made up of what? Impulse move, correction, and then impulse, just like the uptrend. Now, when we go deeper, we can label each of those moves for impulse, the correction, and the impulse. So let's do this. So we have the impulse move, correction, impulse. So in the case of a downtrend, the first one here is the lower high, LH, lower high. And then the next labeling is this one right here, lower low. Let's call this LL. Good. So a downtrend is made up of lower highs and then lower low. So lower high, lower low. Good. So this is a standard trend. So for the continuation of the trend, price will tend to do a correction to form another lower high and then form another lower low. Okay, so when new lower lows are being formed, okay, price is still continuing in that downtrend. Oops. Price is continuing in that downtrend. Okay, so a downtrend is made up of lower highs and lower lows. So price moves from lower high to lower low, lower high to lower low. That's a downtrend. And ideally, as a Forex trader, you always want to be on the side of the trend. So that's why we are trying to figure out how a trend looks like. When price is in an uptrend, you want to be looking to buy at support. When price is in a downtrend, you want to be looking to sell at resistance. So it's not really okay if you are buying in a downtrend because you are buying against, because you are trading against the trend. You want to trade with the trend. So if price is going downwards, you want to be selling. You want to be looking for opportunities to sell. And based on our previous topic, resistance, we sell at resistance. So in a downtrend, you want to be actively looking for a resistance zone where you'll be looking for sales. In an uptrend, price is trending up. In an uptrend, you want to be looking to buy. So in an uptrend, you'll be looking for a support level where you'll be looking to buy. So we buy at support in an uptrend, and then we sell at resistance in a downtrend. Okay, that's a punchline right there. If you understand that concept, it will help you so much in your journey. I'll take it again. You buy at support in an uptrend. You buy at support in an uptrend, and then you sell at resistance in a downtrend. Let me write it down. I think it might not be clear enough. So, number one, you buy at support in an uptrend. And then number two, you want to sell at resistance in a downtrend. Okay, very, very important note right there. So let's go into the chart and then let's spot briefly how an uptrend looks like and then how a downtrend looks like. So after I spot it, as always, excuse me. After I spot it, as always, you also want to, on your own, on your charts, you want to also spot it on your own. All right, so let's just start with the recent display of events here. So we can see price, going up like so. So that's an uptrend. So let's spot it properly. So if we mark it out, we can see that price has done this. We have impulse move, correction, impulse, correction, impulse, small correction here, and then impulse. You can see. So we have price moving from higher lows to higher highs, higher lows, higher highs, higher lows, higher highs. So in this range now, if you want to look for entry, it only makes sense to be looking for opportunity to buy. So, and in this case, you are buying in a support, right? So in an uptrend, what you'll be looking for is a support zone. So in this case right now, check it out just briefly. I don't want to start talking about strategy right now, just to put everything together so far. This is an option right now. Then we are seeing a reversal here. So this is a support, this move right here. Based on this particular candle, this reversal here, you can see price came down and then we saw this move. So this is a support zone. So next time that price gets into this zone, you want to be looking for opportunity to look to buy. So if you are buying, if you are looking to buy, you are on the side of the trend because price is in an uptrend, right? So we will go deeper into those concepts once we understand everything properly. So let's jump ahead of time. Let's take our time to really get this basic first. Okay, so let's see if we can spot something else. So let's delete that. Because of time, we have been here for 2 hours already. Let us wrap up real quick. Okay, give me a second, guys. So let's spot how a downtrend looks like. So I'll just spot this very briefly. We can see price doing this. You can see price going all the way down. can we spot something that looks trendy, a downtrend, right? So you can see something like this. We have this correction, impulse, correction, impulse, correction, then impulse. You can see that's how price moves in a downtrend and uptrend. So you have from lower highs to lower lows, lower highs, lower lows. So in a downtrend, you want to be looking for opportunity to sell in a downtrend. So you're looking for resistance zone, like so. You can see price reacting at this resistance zone in a downtrend. Okay, take all of this zone, price reacting. So price reacted. So we'll have sold here, also probably sold here at this point. Okay, before price changed to an uptrend. So over here is, so if you have brought it forward now, because you understand that, you understand trend. So this of course is already, price is in an uptrend already. All right. So if you know this, you will know that this resistance zone is not valid for this place. You're not looking to sell because price is in an uptrend. You're looking to buy. So in an uptrend, like so, you're only concerned about support. I hope I don't confuse you. So I won't really go deep into that, but the first thing that you want to do is to understand this concept as a standalone. Okay, so understand support and resistance in themselves, and also understand uptrend and downtrend. And then later on, we'll bring everything together. All right, so your third assignment is you want to go to any currency pair at all, any time frame, and then just start what's it called, marking out an uptrend or downtrend. Okay, so just use your time to just do that, and then get familiar as to how price moves. Okay, it will really help you a whole lot. Just play with it. Okay, and then as you're playing with it, notice how price is reacting and how a trend is changing from uptrend to a downtrend. So whenever price is in an uptrend, at a point in time, price will change to a downtrend and vice versa. So price moves from an uptrend to a downtrend, and then from a downtrend to an uptrend. So at the particular point in time, an uptrend is going to shift to a downtrend. I hope that makes sense. Let me know if you understand what I'm saying so far. Please give me some feedback in the chat box. I think we should end here tonight, and then possibly next week, Monday and Wednesday, you can join the live session, and then I can answer your questions. Please type in yes or no in the chat box if you understand what we've explained tonight so far. Awesome, Mr. Idris, Mr. Victor, thank you so much for your response. All right, so guys, let's stop here tonight because of time. We've been here for a bit over 2 hours, and I want us to be able to digest everything that we've learned. Okay, so please, very important that you study on your own. Spend time on the charts. A good time to do analysis and things like that is weekend. Tomorrow is Saturday, Sunday. Okay, weekend, you have, if you don't work during the weekend, you have enough time to really see how these concepts work. So what you want to do is very simple. You want to map out support zones, resistance zones, uptrends and downtrend, and really take your time to understand, to observe how they play out and how price reacts at this very point. All right, because what we have been learning since yesterday, we are going to be using everything together to make an informed decision. All right, so what we are doing so far is just to teach us each of those concepts, right? So the beauty is that We are now going to be connecting everything together. And then that is what a skill set is. So your skill set is finding that interconnection between all of these concepts to create a very, very good strategy. All right. So please, I recommend do your best possible to join the Monday sessions that we have and Wednesday sessions. So every week we hold analysis sessions on Mondays and Wednesday. When you do, you know how all of what we are doing, how it comes together to form a strategy, and how we take entry and how we take exit. All right. Do we have any questions before we call it a night? If you have any questions, please feel free to type it in the chat box or let me know. I can unmute you so that you can speak, and then you ask your questions and then I give you answer. So just let me know in the chat box. So I'll wait for a few seconds. If you have any questions, you can drop it. If there isn't, I would assume that we all understand the concept. Forex trading is a very, very beautiful skill, very, very beautiful, especially when you've built yourself with enough knowledge to make money consistently. So it's a journey, right? So one thing that I tell people that are just beginning is that don't be in a rush to make money in Forex, right? Everything in life has due process, right? So don't think that you use just 1 month or 2 months to master Forex, okay? My recommendation is mastery of Forex trading would come maybe after at least 6 months to 1 year. That's when you can gain some level of mastery, right? But during that process, you want to learn as much as you can, learn and practice. So I was telling, okay, it was not yesterday. So the first thing you want to do is we have a demo account right now. Remember yesterday, you had a demo account, and then today we did some practice on how to open trades on demo, how to use market orders and things like that. So you want to practice on your own, on a demo account, how to open trades. Very, very important. So when market starts next week, you want to start opening trades and closing trades on your own. When you start learning strategies as well, you want to also practice on a demo account. And most importantly, you also want to practice using a live account. Okay, a live account means you are practicing with real money. So an account that is for practice, fund that account with, let's say, $20. That's money that you can afford to lose, right? Because if you are trading on a demo account, you are trading, you are not emotionally attached because that demo account is not your money, okay? So you would have a hard time managing your emotions on a real account, okay? So you also want to practice with a real account that has a little capital, so that when you start trading on that small account, you will learn how to manage your emotions properly. That's where you actually start building real market psychology. All right, so it's very, 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 very important. I cannot stress enough. So ensure that you fund your accounts. Within the next 2 or 3 weeks, fund your accounts with at least $20 and then start practicing, right? When you go for a driver's license test, they don't test you based on your theoretical knowledge or like a dummy car. They test you with a real car, and then once you pass, they give you a license. In the same vein, in the Forex market, you cannot really master anything with a demo account. You need a real account to, get ahead of the curve and start being profitable. All right. So guys, thank you so much for being a part of this 2-day workshop. I hope it was valuable to you as much as I had fun showing you this basic concept. All right. So welcome to the Forex trading market. It's going to be an amazing journey. It's a very, very rewarding journey. Okay. So ensure that you put your heart to this, and then the results will come. All right. If you have any questions at all, feel free to reach out to your account officer or the support on the website, and they will give you all the resources that you need to be profitable. Okay. All thanks to the to 10 Trade. So 10 Trade is the forex broker that put together this boot camp. So we are doing this every month, right? So they are building traders. So thanks to 10 Academy, to 10 Trade. All right. I wish us all the very best, Mr. Idris. Thank you so much. And then I'll see you on Monday. Let's have a remarkable weekend, guys. Bye-bye.